All right, everyone, let's do a quick sound check here. Hopefully everyone is doing well. Hey, Finley, how are you? I'd like for everyone to ask questions and be clear in everything I'm going to show you today. Excellent. Thanks, Tobias. Hopefully everyone is doing well. I'm going to show you a couple of things today. We'll go over breakouts, filters, spend a little time with you. Excellent. Okay, so the first thing I'm going to talk about here, I have here the Atlas line. I know some of you have the Atlas line. I'll do a quick review on it. Hey, Sean, Tobias, Josh, Vidna, Mark. I'll do a quick review here on the Atlas line for those of you who are new to the Atlas line. Hey, Ray. The Atlas line is a tool that gives us direction, gives us the entries as you see them, double bar long, double bar short. It provides bounce trades. It provides pullback and strength trades. So there's a lot here to the Atlas line. Gerard. Well, Gerard, if you don't have any, if you don't have sound, I would recommend exiting the room. And well, he can't hear me, right? So let me just type something here. That's for Gerard, okay? All right, great. Thanks, Gerard. Okay, so let's start here. Let me show you a little bit about the Atlas line. So why do we have here this entry here to go long? This is today, and the Atlas line can be used on any market, right? Dow, Russell, it doesn't matter. Why does this here appear? Well, first you got to focus on direction, okay? The direction is if price is trading here above the Atlas line, it tells me that I want to focus on taking long trades. If price is coming below the Atlas line, so the Atlas line is this pink line over here, and I have it as a dash, but you can have it actually, or any color you want, I should say. It's right here, Atlas line right there. And I have it here, I have it outlined as a pink. So if price is trading above the Atlas line, you want to focus on longs. If price is trading below the Atlas line, you want to focus on shorts. So it's very simple when it comes to that mindset. Now, as far as the orders themselves, we have to base them off of price action. All right, great, Jared, thank you. You have to focus on price action because price action is much stronger than following moving averages or MACDs. And so I really try to stay away from any type of conventional indicator. Now, I do use the ATR, as you may know, and I use the bar timer. Let me add the bar timer here. And the bar timer, right over here, is a great tool to use because I know exactly when a candle opens and when a candle closes. This is really important, really important, because when you have a candle open and closes, it signifies something. So these orders that you have here, double bar long and maybe here even a double bar short, right over here, that's going to appear, I have to base it off of the price action. So two candles that closed either above or below the Atlas line will provide me an order to go long or provide me an order to go short. So for example, this 1946 occurs because we have 1, 2, just like Finley said here, 2 consecutive bars that have closed above the Atlas line in this case, like this. So above the Atlas line, there are 2 consecutive candles. So this tells me that price action wants to stay above the Atlas line. I want to take a long trade. The entry is always the closing price of the second candle. So it's very clear where we're entering, why we're entering, long. We just have to manage the trade. We have to make sure that from this point on, we have stops in place and we manage the trade properly. When you see this here, I know that I want to go long, okay? So now as I go forward in time, the goal here is to take this long. Now, if there's any indication that the market does not want to continue higher, at the first instance, I have to cut this trade loose and say, it's not going in my direction, and let me get out. So we have our stops in place. I like to use time as a stop. I like to use some type of catastrophic stop in case the market moves right against me based off of news. And I also like to use a type of proof. If there's any type of proof, then I should not be entering in that direction, okay? So I use all of these in conjunction to guide me throughout the day. Now you have to also wonder, what if, this is now a little bit of filtering, what if the price is really far away from the outline? Should I still be taking it long or short, right? And the answer is no. So if you look at the relationship where the outline is plotting and where you enter, it's very important. So I'll give you an example. Let's say that here into the future, right? Here into the future, let's say it looks something like this. You have two candles that cross the Atlas line and give you an entry like that to go short, right? Then what? Well, by definition, this is two closes below the Atlas line, so you'd be going short, right? But if this entry is far away from the Atlas line plot, then you have to wonder, is the move over? Is it overexhausted? Is it oversold? Is it overbought? You have to take that into consideration. So how do I know and how do I teach this to the group of traders I work with? Well, before you enter short here or long, right, could be the opposite way, I want to look at this average true range. And I want to ask myself, if this average true range, let's say it's 2 points, right, 2 points, I want to ask myself, am I entering more than the ATR value, which basically means the move may be over. It may be overbought or oversold. Furthermore, I like to use not just 1 times the ATR, but I like to use 2 times the ATR. So what I like to do is I like to double this value. I'm trying to enter as close as possible to the Atlas line and take it down, or as close to the Atlas line and take it up. So I really am trying to, as far as establishing, am I entering after the move is done? Because typically when the big move happens, a big crossing of the Atlas line, it's not the best entry to take. It's always something that has to either take a breath, stop, pull back. I always try to enter as close as possible and take it down. It's really the start of the move. So that's very important. Anyone have any questions for me? All right, so the closer you are to the Atlas line to take it up, the better positioned you are. The closer you are to the Atlas line, the better position you are to take it short. Also, if you're entering more than, let's say if this ATR is 2 points, more than 4 points away, it's overbought or oversold, or 4 points to the upside, overbought or oversold. So this is how I gauge whether or not the market is even worth jumping in at that time. All right, let's talk a little bit about what's happening in the financials. I'm going to bring up here, you've probably seen a few of the videos I put out where currently this is how the weekly chart looks. And as you all know, everybody's talking about, when is this market going to reverse? When is it going to pull back? When is it going to come down, right? And I agree that it's time for this market to turn around, but we have to do it with caution. We just can't. As soon as the market begins to break, it's an indication to go long or short. So this candle here, about 3 weeks ago, plotted, and everybody said in all the newsletters that I saw coming across my desk, everybody said, let's go short, everybody go short. But the candle is so large that it causes a concern. Just like I use the double the ATR to tell me if it's overbought or oversold, you could use that same idea before going long or short, because you really want to take this short at the start of the move and take it down. entering short here after a big run is dangerous. So I never recommend jumping in on a breakout in this fashion. You can take it short if it happens to pull back closer to where it came out from. You can take it short after we have more data, maybe another week or two, that it's starting to go down, because now there's more proof. But jumping in headstrong like this is not the way to go. This is, I think, a little bit of an issue. Okay. So how can we take advantage of this? Well, there's a couple of things that I look for when breakouts occur. The first is the breakout so strong that the move is over? If I was able to get in short early on, great. But now we're here. So this is not, at the close of this candle, the short that I want to take. Now, if this comes back up to test these highs here, I would say that that's a good thing, right? Market's doing what it's supposed to do. Markets love to test where they have previously traded. So if you are looking for an opportunity to go long or go short, to go long, wait until it breaks the current highs. It's going to move higher. And you can go ahead and take it higher, right? If you want to take it short, give this a good amount of candles. In this case, it's a weekly chart, but we're on 3 bars so far. Make sure that this here, even if it's tested, isn't broken. And then you have the opportunity to go short. So really, I'm anticipating the market maybe reversing or maybe going higher. I don't know what's going to happen, but wait. It's not the opportunity at this moment to go short. Wait until it tests it. If it tests it and it's not able to break through it, you have an opportunity now to go short. If this breaks higher, you have an opportunity to go long. So just wait. There's no sense in rushing this. If there's going to be a big drop, it's going to be weeks on end. It's just going to go and go and go. Historically, and I do look at cycles, but I'm not a big cycle or a cycle trader where I look at data that's happened in the past and tell me as far as seasonality what to happen. But we have to take this into consideration. September is seasonally and historically a down month. So look for, if anything, September 2014 for the market to do a little bit of a dance to the downside. Wicks are important, right? If you think about failures, right, Finley? You think about how the market fails each time it tries and fails, tries and fails. So when you're trying to understand if wicks are meaningful, I think they are. Each time you have the market hitting support or resistance, you're going to see these wicks. Now, I call them yo-yo bars. Other traders may call them something else. To me, it reminds me of a yo-yo, where the market goes up and can't continue down, up, right? And then for whatever reason, the sellers are stepping in, and the market gets pushed back down. Now, I have to say, we see these candles with wicks, or these yo-yo bars, as I call them, right? It reminds me of a kid's toy here, like this, where the market goes down and comes right back up because the buyers are stepping up and overpowering the sellers. We can see these candles with the wicks everywhere, so they're everywhere. But the focus isn't on just one candle with the wick to the upside. That's not the focus. The focus is a grouping of them, because when you have a grouping of candles that show you that the market is trying and failing multiple times, at that point, it's a world of difference, because now you don't have proof of just one candle or 2 candles. You have multiple candles telling you all the same thing. And at that point, it becomes clearer that there is some type of strong support or strong resistance in action. But one candle by itself is typically not enough information. Okay? All right, what else can we talk about? Well, the methods that I teach are based off of price. So if you have seen the ABC, how to trade the ABC video, if you've seen how to trade the news, they are all really based off of price, right? That's all they're focused on. So for example, you have a large bar. I'll just put this out of the way here. You have a large bar that is trading. As soon as the news comes out, you have a candle that works like this, right? And the news is negative, right? A large chaotic candle. Well, price action would tell you that everybody went short. There's only one reason why that candle is red. There's no analysis. It's just the report is negative. Everybody jumps in short. Now, when it comes to news, if you've seen it, you know that it's a very fast move. So no one really got short here at the start of this downward move. Most traders with slippage and hitting market orders are getting short right at the maybe end of the move down there. So this to me is a great thing because I know that there was a move based on emotions, on reaction. So when it comes to trading the news, I don't think that jumping in, similarly what I just showed you here on this weekly chart, I don't agree that going short at this point is the right thing to do. Had I got in earlier, okay, it would have been better if you were able to see it happen. But when news occurs, you have a fast move and most traders jump in short. Now, psychologically, you have to think about what happens if these traders are wrong and the market takes some other aspects into the market, into the consideration of it moving higher or lower. If you have thousands of contracts that are open and this does not continue lower, then you have to think, how do these traders manage the trade? How do these traders focus on getting out or getting in or reversing? And that's where I take advantage of a move like this, because when you have a big strong move based on emotion, you would expect that it to continue, but it normally does not. It normally does not continue to the downside or to the upside. And so if this begins to climb up, you have many, many traders and many contracts that are now going to get stopped out. And so what you typically see is a large candle. It doesn't have to be right away. It could be an hour later, 2 hours later, 5 hours later, or any time throughout the day. You're going to see everybody bailing out and jumping ship, beginning to reverse, getting stopped out. And typically there's a giveaway. The giveaway is going to be one candle, maybe 2 or 3 bars later. I like to use a 5-minute chart. That is large. Large meaning as soon as it hits these stop buys, all these traders are beginning to buy and get out of this short, and they may also reverse. So you have a fueling effect that fuels the market in the opposite direction. Now, I don't wish anybody to lose money if they try to go short here based on news. So the only thing that I recommend is don't jump in at the end or tail end of a large move, just like I've shown you here on the weekly. I don't want to jump in here after a large move. If the market starts to climb back up, right, starts to climb back up, then you're going to see a candle that is very strong to the upside, and it's just going to continue anytime throughout the day. So it doesn't matter if it's an hour later or maybe an hour before the market closes. It doesn't matter. Anytime throughout the day, you can go ahead and buy it, do the absolute opposite of the initial reaction. Okay, so in this case, this is a weekly chart. It's a little bit different than intraday because I'm using a news event that has created a big move up or down. If it doesn't continue, you know that all of these traders here are now buying and getting stopped out, maybe hitting reversing, and it's also fueling this fire in the opposite direction. The same thing happens during a news event. It's just on a smaller scale. Everybody jumps in, they're wrong, they have to get stopped out or reverse, and that's where I take advantage of it. Tobias, it depends. It's a good question. When are there opportunities? Well, you only have to look at red stars or red flags, and it's not just U.S. news. You could look at European news. You could look at the Australian dollar. And so I have here a news indicator that I created. You can download it for free at DayTradeToWin.com under software. It's news indicator right there. And I'll add it here to the chart. And the news indicator allows you to choose whether you want European news or US news or today or low priority, high priority. So this is how I have it set. If you want to copy my settings, the high priority news events are what I want to focus on. And so I want to look at high priority news events, US only, which impact the US markets. And what you see is this here. So the opportunities that arise are only going to be when there's a red or red star, if you want to use a different news indicator, like the Bloomberg Economic Calendar I like, or if some of you may use the Forex Factory, or something else, right? But I always look for these high priority. They usually are at 8:30, which means that anytime throughout the day after 8:30 I have an opportunity. The 10 o'clock news event, anytime throughout the day after 10 o'clock, or the FOMC, which is at 2. So you could have an opportunity once or twice a week, but this has to occur. The market has to move in a chaotic fashion, and it has to reverse. So you may have an opportunity 2 or 3 times a week, Tobias. They do, right, Finley? They shake out all the people that went long or short, absolutely. Andre here, can you explain a catastrophic stop? Catastrophic stop is based off of what happens if you enter long or short and there's a catastrophe. There's an earthquake, there's a terrorist attack, there's something that happens in the world that puts the market against you in a strong fashion. So you can't have a time-based stop, because a time-based stop will, in essence, do nothing. It'll just be 4 bars or 5 bars later that you're waiting for the profit to be made, but by that time the market can be against you by 20 points. You have a prove it stop, which is some type of proof that says the market's not going in your direction, let me cut out of this trade as early as possible. But a catastrophic stop has to be based off of the current conditions. I like to double the current conditions, and once I double the current conditions, I know the maximum that I'm going to risk on the trade. So it's relevant. If the ATR is at 1 or 2 points, then I know that I should risk only 2 or 4 points. If the ATR is slower, I know that I shouldn't be trading. If the ATR is more volatile, I know that I have to give it a larger stop. So it's really relevant to the current conditions. I like to double the ATR as a maximum for a catastrophic stop. Andre says here, in the B part of the day, we trade according to A part. In C part of day, we trade according to the B. How do we use the A in the part? Well, the A part of the day is where you have a lot of opportunities, and you have to either look at a breakout, you have to look at whether or not there's news, you have to look at some type of scalping, trade scalper, or the Atlas line. So you can't look at the A without looking at something else prior to it. You can look at B, what happened to A, you can look at C, what happened to B, but A is on its own. So now I want to show you if Tobias or Andre is looking at the ABC method. I'm going to stick on here the ABC method, and I may be able to help you further with that question. So the ABC method is, I'll show you this here. The ABC indicator here that I offer is here. The ABC indicator that I offer is based off of what is taught in the videos that you saw. Here is the A and the C, right? So the question that Andre asked me was, how can we trade here in the A because I'm comparing this. So there is a different way to go about doing this. So what I like to do is I like to add another ABC. There's it here, ABC method. But instead of adding it at the same time, I'm going to change it to the UK session. So I have here one starting at 9:30, and I have one starting at the UK. The purpose to doing this is going to be when you have almost like the same example where you have during the UK session, you have the A part of the day, you have the B part of the day, and you have the C. You would utilize this last part of the UK session, which is from 8 o'clock to 9:30, and then look for, it's the same thing in reality, look for it to take out the highest high or the lowest low of C that occurred during the pre-market or the UK session. So that gives you maybe a little bit of an idea, Andre, on how you could use it. The outline is available in TradeStation. Yes, T, TradeStation, eSignal, as well as NinjaTrader. If you need NinjaTrader, just email us. That's right, Chad. I have Chad here in the room with me. And you do get the ABC software with the Power Price Action course, yes. So if you don't trade the E-mini, Andre, right? If you don't trade the E-mini and you can't use the Atlas line because it's a different type of trading. And let's take a look here what the Atlas line is doing. Then the Power Price Action course is a way to trade price action based off of just the price. It includes training with me for 8 sessions, and you can trade any market with it. So you're not just on the E-mini or just on one time frame or day trading for that matter. So that's what I would recommend. Here is, let me just remove some of these things here. Here's what the Atlas line is currently doing. It's telling me long, and so as you know, here are the orders to go long for today. And again, it's the same thing. It's based off of price action. You have 1946 quarter here to go long. On other markets, here's the Dow Jones. A little bit different for the Dow, but the idea is the same. Based off the price action, here is the 2 closes to go long. 16,624 based off the closing price of that candle right there. That's the Dow Jones. Russell should be fairly similar. Bring up a Russell chart. And I'm just showing you examples of what the Atlas line is doing for today. Let's see what the Russell looks like. Similar to the E-mini S&P. Not as good as the Dow or the E-mini. So here's the Russell trade. For the, let's take a look here, Australian dollar. Those of you who like the Australian dollar, you can take a look at what the Atlas line is doing on the Australian dollar. Currently short. And on the euro, same thing. Let's take a look on the euro. Short on the euro. The closer you are when you enter to the Atlas line, the better positioned you are. I always think of it in those words. False breakouts can be, Tobias, can be managed. You manage them how far away you enter. You manage the false breakout when you have a situation where the market goes down and then the market comes right back up. This is considered a false breakout. So there are ways to manage false breakouts, absolutely. And those are taught in the Power Price Action course. Not the ABC indicator. The ABC indicator is, it comes with the power price action course. It's recorded, Sam. Yes, I'm recording this. Yeah, it'll be on YouTube later today. I'll put it on YouTube later. If you guys have any questions, you can always email me follow up as well. You got it, Sam. Take care. Sam's got to go to work. So you can check out YouTube later. I'll put it on, and maybe I'll even send out an email letting you know that it's available on the blog too. You can make $100 a day, Josh. I think realistically, if you think about, what most traders want, they want thousands of dollars every day. And usually, if you have a large account size, you can do that. But you really can't expect that right away from the beginning with a small account. $100 a day comes out to 2 E-mini S&P points. Some days you can make 2 or 3. Some days it'll be 1. Some days it'll be a loss. Some days it'll be break even. But on average, you can count on $100 a day trading 1 or 2 contracts. I think it's fair. It's not out of the norm. For Forex, Andre, I would consider the power price action. Yeah, Tobias, European markets. Is there a market you want to see, Tobias? The DAX or actually the Euro Stoxx 50 is a better market. Let me see if I have that here. FESX. Let me just add the FESX. The FESX is better than the DAX, in my opinion, because it's more of a tamer market. You don't get hurt as bad. The DAX is very strong. Let me just add here the FEXX. And so if you're looking at a European market, use one that's not going to cut your head off. And the DAX sometimes can. FEXX. This one right here. And they work in tandem. So let's take a look what that looks like here. Okay. So there's, and the FESX, the DAX would be very similar. It's a short trade, 30.58. And you can use, by the way, this ABC method that I have here on the chart, you can use this method really on any market. So I know I show a lot of E-mini S&P, but the traders I work with, they are from all over the market. They like stocks, they like currencies. Some of them do Forex, but I'm not a big Forex trader because of the spreads. I prefer futures. But this ABC method that you see here, just apply it as you see it. See, I have it here on this FESX. Markets all work the same way. Based off of price action, you have the A part of the day, the B part of the day, and the C part of the day. Typically, the B part of the day is slower unless there's news and the market breaks out, starts a trend. I have my proof. Andre said here, you trade also according to the Atlas line. I use the Atlas line as part of my trading. It's not the only type of trade that I look at, but it's software that I use. I don't use any moving averages. Andre, let me just forward this to everybody. I don't use any moving averages. I don't use MACDs or Bollinger Bands, trend lines, Fibonacci's. I don't use any of that stuff. I don't personally use it. Yeah, I would stay away from the smaller markets. And you know how you know if you should stay away from a smaller market? You know because when the ATR, the average true range, is so slow, it's not worth trading. So, for example, let me go back here to the ES, and I'll give you a great representation of when you should be trading and when you shouldn't be trading. You see here, and you can apply this to any market too. So I know I'm showing you this on the E-mini, but convert it to what you trade. This here tells me that the current conditions are 6 ticks, 1.5. It's worth trading. We're in the A part of the day, and let me just remove here the ABC. We're in the A part of the day, and typically this is the most volatile part of the day, so we're working at a good clip, right? But if you look at an overnight session, you're going to see that when you have, or I should say off hours, when you have the market acting slower, and I can just give you an example here. When the market is slow, you have this kind of action. Now, I don't know about you guys, but it's almost impossible to look at this and not fall asleep. As a day trader, I feel like I'm gonna die looking at this here. So this is not good. How do I know when this occurs, or how do I know when I shouldn't be trading? Well, I put a line here, 1 point, and which is 4 ticks. Anytime the market is less than 4 ticks, I can expect what you see here. So as far as taking every single trade that comes your way, this obviously is not going to be an opportunity to do anything. It's just whipsawing back and forth, back and forth. So on the ATR, the average true range, I like to use a setting of 4. Whenever the market is showing you less than 4 ticks, it's always best to stay out the Globex session, right, Finley? Always best to stay out. Here, market's working at above a point. I know that I have enough activity to make it worth my while. So you always know whether or not it's worth trading and whether or not you should stay out. Take, for example, a euro currency. I'll do the exact same thing that I just did, but instead I'm going to look at the scaling of the ATR, a little bit different. You have to move the decimal place over 4 places to the right, so this is 4 ticks. When the market is trading less than 4 ticks, there's nobody there. It's a manipulated market. It could pop in either direction. And look at the example. There's nothing. The market's just flip-flopping back and forth. So whenever you have any market really that is trading that less than 4 ticks, forget it. It's not worth the risk. Every time we put on a trade, we're risking ourselves to a trade or a loss. I want to make sure that if I do have any risk involved with my trading, that I have the best opportunity to succeed. Okay. 4 ticks is 4 pips. Yes, Tobias. Yep. Absolutely. It's sideways, right, Finley? Right. I have to look to see if there's any news events that would have kept out of the market. Okay. So that's the euro. This is the E-mini. And this is the Dow Jones. Okay. So overall, it looks like it's going to be an up day. Famous last words, right? Looks like or could be. I don't like to use those words. I think they'll get you in trouble. And you see how the market is turning around. Whoever went short is now having a little bit of a problem. And the reason why you're seeing this turn around is because these shorts are all getting stopped out, and they may even be reversing. My recommendation is to look for what happens when price comes and tests. It doesn't have to test this exact high, but right around here, right where the top of this, the opening price of the 72.50, let's see where it goes. I would not be surprised if it went and tried to test this here. But the reason what you're seeing here, these buys, are probably because people are getting stopped out. So it's kind of a common sense type of thinking. You don't need indicators for this. You just have to have a good basis of why and how the markets work. Best time to trade is A, or within the first 2.5 hours of any session. Yeah. 4 ticks is 4 pips. It's the same, Tobias. All right, very good. Anyone have any questions for me? I try to put out as many videos as I can. Creating these videos takes some time, and so I'd like to do a video every day, but sometimes it's not possible. But I'll try to do more videos. I know you guys like the videos, and I also always answer support questions myself. So those of you who are current clients of DayTradeToWin, you know that I try to answer all questions directly. If you have any support questions, you need NinjaTrader, or you have licensing issues, I also have a staff that does help install, and the support I think is very good here at DayTradeToWin. All right, everybody. The next class that I'm having is probably going to be the start of September. I think September 4th is the next mentorship class that we're starting. I have already a few people signed up. As we get closer, usually the classes fill up. So if you'd like to take advantage of joining the next mentorship class starting September 4th, please email me. I can send you all the details. And you can join me for 8 weeks, twice a week. I like to record everything, so all the videos and all the training is all recorded for you and sent to you. So that's a positive note on the programs we offer. And everything is included as well, so it's an all-inclusive program. Atlas Line, Trade Scalper, ATO, Roadmap, Blueprint, X5, courses, you get the whole thing. Josh, when it comes to binary options, this is something relatively new that I haven't jumped into just yet with the binary options. I'm not an options guy. A lot of traders that I work with that are trading options, the way that they look at it, because there's so many ways, right? By minutes, by hours, by seconds, right? For the binary options, you have to look into the future and say, where is the market going to be, right? Now, with what I offer, the Atlas line is telling me that any trade that I take here should be long, and I would expect the market to go higher. But timing is everything. So when it comes to binary options, if you are using or you want to use the Atlas line with binary options, you have to place that bet as soon as or early on when you have the order. You can't do it up here because this is beyond the fact. This has already happened, right? We're moving now into gravy, if I could say gravy, right? So if you do want to use binary options, at least try to place the trade as soon as you have confirmation that this is above or below the Atlas line. You may want to use instead of a 5-minute chart, you may want to use a 1-minute chart. And this is what a 1-minute chart looks like, right? Using the Atlas line. And so as soon as it starts to plot here, you can say this is where my opportunity, or as soon as it starts to plot here, here's my opportunity. So there's more flip-flop with a 1-minute chart or a smaller time frame, and that's the reason why I prefer a 5-minute time frame. But if you do want to trade binary options, that's really the way to go about doing it. Or if you want to use a tick chart, you can use a tick chart as well with the Atlas line. It's just some recommendations. All right, everyone. Email me if you have any questions. You can always call me if you have any questions as well.